All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is February the 3rd, 2025, year of our Lord, and boy, oh boy, was the market on business today. As you can see, this big-ass 4-hour candle that I'm looking at on the Dow Jones, barely any wick at the top and a small wick down at the bottom, but just all buying all day long. A nice little pullback into the in-wall and then continue buying all the way up to the previous day low. I haven't even seen how many points this is, but I'm betting it's a lot, right? Like, I think that, yeah, we rallied a little over almost 2% today, 743 points to the upside. Man, what a day. What a day. I caught probably in total almost 400 of these points, back and forth. But man, took some excellent trades this morning. Very satisfied with what I did, but we're here to review the market plan and just make sure we stay on par with that, right? As long as we trade in that plan, you can't really be upset with your executions and your trades and stuff like that. And I'm just getting really good at just trying to focus in, lock in, and just trade the plan. So let's jump right into that. Current conditions: we were in a tight consolidation after a massive overnight gap. We were bearish as long as we stayed below 655, and you can see the market ended up going straight to 655 and trading above it. So that bearish shit is dead, right? We were bullish as long as we stayed above 43,289, which was down here, and we definitely did that. Overnight, the market gapped down massively, and buyers should look to buy this dip similar to last week's gap. This is the exact same setup from last week. You can even see it on my chart right here. We gapped down, and then the only difference is during Tokyo, we continued to sell down all the way into like 1-2 o'clock, right? And then we rallied the rest of the night. This time we sold down one time and we consolidated, right? Which is, in my opinion, even more bullish, right? But however, bulls have not shown much interest inside the range, so I would need to see them trade to the extremes before making any executions. Down here, I drew a PM session range. I had a couple people hit me up about like, hey, what is your chessboard levels for today or whatever. Like, my chessboard levels are always going to be the same for PM session highs and lows. And then when we have setups like this, where the PM session high is way up here, I'm still going to leave my PM session high and low up there, but I'm going to show you guys how I go about drawing chessboards for the secondary session, right? So bearish, I was looking to short weak rallies into the in-wall at 590 at 5 through 529 and look to target the top of the range. Although this 4-hour candle did blow right by this in-wall, it didn't go through just like this. This was actually a really good trade setup. I was looking at it and it looked like it printed for like 150 points. So if you caught this little short right here, it was a really nice short, right? Targeting top of the range, but obviously trailing because we were so bullish, right? All right, so look to short the high and low of the range, right? I wrote inside of the Discord, I edited this to say the high and low of London and Asia, Tokyo, London range, because that's what this is. The regular range is usually just PM session highs and lows, but this right here, this is Tokyo, Asia, London. I'm gonna show you how I got that here in a second, but 44,257, right, at the high through 44,164, and then at the low, 44,039. I moved it up during the day because I was like, oh no, this is it right here. But I had 44,078 through roughly about 43,962. The other thing that I added as I was going back and looking at my chart today is I continuously see the Dow Jones do this, where when we come down to these lows, if we sweep these lows, we just literally come down and close these gaps, these 4-hour supports. We're not closing all the way through. We're just coming down to the previous tops. So just a little habit of mine, I make sure that I mark these 4-hour resistance, 4-hour support levels, because as you can see, we landed right on top of that, right at 44,000. We damn near did the same thing last week as well. All right, so let's drop down to the 15-minute chart and we'll go through some of the trades that I took, and then how price was developed inside of market structure and time. And then we'll switch over to a couple other instruments as well. Oh shoot, I just realized something. Give me a second, guys. There was something else I had up here, but then I deleted it on accident. Give me 2 seconds. There it is. And I wanted to take a picture of Jay Seals' plan when I get over to the S&P. So that's what I'm gonna review over there. All right, cool. I got that set up. All right, cool. So coming down to the 15-minute, right? If we turn on Lux Algo sessions, right, and we understand how prices develop, okay, what we're watching for is inside of this yellow, pink, blue box, right here. We're looking to see where the liquidity is resting, right? In ICT land, they look for where the draw on liquidity is, right? Essentially, if we're in consolidation, right, and we continuously not making new highs, not making new lows, but London's high is still intact, right? But it's not bringing a new low beyond this low, meaning this low created a new high, then a higher low, then another higher low. It didn't break the high, but it's not taking out the low. So essentially, because we're at full discount, right, you should be looking for the market to at least retrace, right? That's just off GP, right? However, when you're looking to see where the draw on liquidity is, it means where's the money at, right? If we're all the way down here, where's the money at, right? The money is in Tokyo, okay? That's where the money is at, right? When I say money, I'm talking about stop losses. And you can see when the market rallied up above that, this was the signal we're going long right here. As soon as the market took this high, I was in this trade. I took profit right at the highs up here. And then we came all the way back down and could not make a new low below this low. It was ball game, right? And these are little paper trades that I took on that particular setup. But I was already done on that first push out. You know, maybe I should have stuck around for that second push, but it's all good. I'm not even tripping in the least bit. Tomorrow's another day, right? So let's come down to macro time and let's see how price was developed. And I'll kind of show you guys like, oh, actually, let me go to the 15-minute. I want to show you guys how I draw the chessboard when we don't have, you know, when we're not at PM session. Essentially, it's the same, right? I just go to 6 o'clock. I usually stretch this out to about, 4 o'clock, 6 o'clock so I can see the candle structure. Then I'm looking for that rally base drop or that drop base rally or whatever candle, and I mark the top of the wick. I stretch this out to 1800, just like I would up here. And then all I'm doing is looking for the lowest point of like London, Tokyo, whatever it is, which was down here. And then I'm looking for that dealing range, right? So that wick right here, the wick at 10:30 and then the wick at 11:30 p.m. Right there, that's my dealing range. That is my chessboard. So what I'm looking for is when we come down to the lows, I'm looking to get long. When we go up to the highs, I don't touch it. And I said that in the live stream. I said, hey, I understand that there's an opportunity to go short every time we get up to the highs, but I don't trust the bears. So I'm just going to ignore all of the shorts and I'm only looking to take the longs down here. If we get above here, then that's a different story, right? And then I said, once we get above here, I'm looking for a break and a retest of this area to go long, right? But I was already in the long. So anyway, if we go over here and we look at what time I started trading, right? So I come into the market at like 2:50 my time, 3:50 London time, right? Boom, nice little long right here. I think I got long 44,056. Yeah, 44,056 was my entry. My target was way up here, which was correct, but for the wrong time, right? I had a New York session target right inside of London, right? So instead of holding this, I just took it off. As soon as I got up 100 points, I just trailed and then I got stopped out for 100 points, right? My second trade, right? When we came down here, right? I got long again inside of the 750 macro. I think my entry was, no, I didn't get long here. I faded this trade. I let it come up. And then as soon as we traded all the way down, I waited until 9:30 and I got long. My entry long was 44,036. So the second trade I took was 44,036. My stops were below 43,962. The market traded straight up. I think this trade was 250 points. It was a straight body bag, right? I was done for the day after that. Well, technically. Then when we came down again, I was like, okay, I didn't quite make 3,000 because I'm on a combine account and 100K. I didn't quite make 3,000. So I was like, all right, I'll risk 5 micros here. I got long 44,055, right? And because I was too afraid that if I lost, I would go tilt, right? Because I know that's one of my triggers, giving back money on a good day. I went to break even and then I locked in $30 and then this thing ended up tapping me out for 30 bucks. Hindsight being 2020, if I wasn't psychologically tilted already, not tilted, but like knowing that the tilt was around the corner if I fucked this up, I just locked the account out. And then sure enough, this wick came right here, and that was the answer right there. All I had to do was fib out this wick. 50% of this wick would have took me right into this low right here, but that's okay. Like, I'm okay if I have to trade another day, it's fine. I'm not even tripping. But let's look at time. We traded down into 920 like we do every single day. Not every day we trade down into 920, but it follows structure, right? We trade down into 920. This is why I'm interested in these trades. I know how the Dow Jones moves, and I know that the chances of a 200-300 point move right here is very high, right? Then they ended up selling down and giving back the entire candle and some. So everybody that got long, no matter if you got long the perfect position, right? If you went to break even, you was getting stopped out right here by this candle here. But then we looked and we traded down into 950, right? Consolidated it a little bit. We had news, and then the announcement from Trump came at or around this area, right? But we were already set up to rally, right? The announcement from, I don't know, Mexican board, I don't give a shit. Anyway, the market was consolidating here, and I'm gonna show you guys a little something that I'll never really like show it in real time. But if you look over here in the bottom right, right? You look over here in the bottom right, this is the volatility index, okay? The volatility index is a chart that aligns with the market in a sense that it does the opposite of what the market is doing, right? And this is another reason why I was so bullish on the day, is because if you look at the volatility index, right? I'm gonna turn the Dow Jones on the 15 minute, and we're gonna go over here to the volatility index, okay? If you look at the Dow Jones in the top left, right up here, as soon as we got above these highs right here, 44,083, and we came down and put in this low right here, that right there was the flip bullish, okay? Same thing with the volatility index, because it's strong now because there's a lot of participants, so I can watch it on the 15 minute. The second we got below this low at 830, the VIX was bearish. So all I did was draw a 50% retracement from high to low. And I'm just looking to see how the market is going to react when we come back up to into this structure. At the exact same time, 10:15, right? Let's go back to the other chart. At the exact same time that the VIX hit its high, or its retracement high, is the exact same time that the Dow Jones took off and rocket ship up to the upside. The second I saw the VIX rallying up to that level, I was like, yo, it's time to get long, right? Because I understood that the amount of selling that I was seeing that was being indicated by the VIX was being absorbed by buyers at that level. And because the VIX was in bearish character, the market was in bullish character, that was like a quadruple confluence to go long, right? Not to mention the 200 EMA was right here on the 1 minute as well. All right, so anyway, I just wanted to share that with you guys. If you're interested in learning more about the VIX, let me know, I got you, right? So anyway, we trade down into 1025, rally straight up into 1045. This is the trade that was on the pre-market plan, right? If you look at the pre-market plan, I said, hey, I'm looking to short week rallies at or above or at or near 45,591 through 45,526. Look, we tapped 45,591, ran it just a little bit, failure to go higher. I mean, that trade alone is like, I don't know, that's a 100-point trade right there. Look at this. Like, I know it doesn't seem like much, but 100 points on the Dow with two minis is $1,000, right? That's 124 points. Let's say you didn't like the first entry, right? You say, okay, well, when we run this high and we fail to take a new high, I'm gonna get short right here. This trade right here is 181 points. Mind you, the market buys this shit right back up. I'm not saying that like it lasts forever, but the trade works, right? And that's not in hindsight. That's understanding the structure of the market, using proper levels to identify areas in which the market should react to, right? And if you look, this white box here, this is PM session low from Friday. Every single day I write the same exact plan about the PM session highs and lows. I'm looking for a break and retest. And I was talking to Yoga this morning, and I said, although this is a huge breakdown, I'm expecting the market to tap back into the PM session low for a break and a retest. And that's exactly what we got inside of 250, right? So if we continue to follow time, all of this was the market bearish character. From this high to this low, everything above this high was a short, in my opinion, right? We trade up into 1125. We're starting to trade up into the macros, right? We trade up into 1225, come down. We trade up into 110 and finally get the push into 250. And we finally dump at 250, right? And when I say dump, Now we're just ranging out between the NWOG and the PM session low from the day before. So ultimately, as usual, the Dow Jones was very, very clean, right? The moves were really nice, right? So let's go over to the S&P 500 and let's break down price over there, right? For the S&P 500, Jay Seals had a really nice plan on the S&P 500. He said there was a crazy gap down on the ES overnight because of the weekend news from the tariffs. Today, Trump is meeting with Mexico and Canada over the new tariffs. So I expect more random, quote unquote, spikes of volatility for when that news comes out. Bullish. As long as we're above 59.66 to 59.55, I want to look for longs targeting 601450. And bearish, if we are so slow, I'm not looking for shorts unless we get the market to come back up to 6,014. So when he showed up to the market, he was completely bullish. It was funny because this is not what ended up happening. But I ain't worried about it though. We go spin the block on this market tomorrow. But if we look over here, right, and we just turn off future settlement and all that good stuff, right? The way Jay Seals sees the market is very, very similar to the way that I see the market as well, right? My thought process was, as long as we were above these lows at 59.36, right, then we could look to, Jesus, this market is still sending. We could look for longs targeting this NWOG and then the PM session low right here, right? And you can see on a paper trade, I actually took the exact entry at 59.55 that was off Jay Seals' pre-market plan. 59.55, and then I targeted 59.67 and then 59.89, but his target was 6014, and you can see we went right into 6014, and I actually had a data low right there, at a data projection low right there at 601375. So like it's like his plan was lining up with what I was looking for anyway. It was just, sometimes in the moment you can either like hesitate just for a second and you can miss these setups, man. But ultimately, if you follow your pre-market plan every single day, I'm telling you, you'll be even more satisfied. Win, lose, or draw, right? At least you followed the plan. You feel me? So inside of 929.30, very similar to the Dow Jones. I would not want to be clear. If this was the S&P, my instrument of choice today, I would not have taken this long right here. Right? Even though we traded down into 929.30, I would not have taken it because it wasn't down here yet. Right? I would have passed on this trade, and instead I would have been looking to long right here, right? Trading down off 950, 1010 because it lined up structurally with what I was looking for. And that's what I did when we came down here for on a paper trade, right? Like these executions are all demo trades, but demo is where you learn the most in my opinion. But anyway, so we get the break and the retest of this high, just like the pre-market plan. If I wrote it, this is exactly what I would have wrote. 59.8875 right off the tap right here, inside of 1025, selling down, rallying up above 1025. I would have been looking to short right here at 6032. Dang, look at this gap right here in the middle of price. But yeah, 6032 would have been my short, straight down into 6,004. That's like almost a 30 point. That's like 28 points right there. But again, the NWOG was acting as a ceiling, short, until finally we were unable to break the low right here. And that's when characters shift back to the upside, right? Traded down into 110, 6010, right? Straight up into the PM session low. It took all day for us to get up here, but ultimately we went right to the PM session low, which is exactly where I thought price should be headed in the first place, off a nice drop and retest like we got. All right, let's move over to the NASDAQ, and you'll see that again, all of the instruments did the same shit. The NASDAQ is just, it's really aggressive, right? So I'm glad I didn't trade the NASDAQ today, because I would not have been into the trade the way that I wanted to get into the trade, because I would have needed a little bit more of a pullback, right? As you can see, I had my chessboard drawn on the NASDAQ, and I was looking for the market to come all the way back down to 21,054. The NASDAQ had other plans. It was like, nah, we bouncing right here. And another thing I like to do, if you guys don't, this outer border chessboard, I sometimes put a midline. Here, and I use that as another entry criteria. And if you put the midline on this chessboard here, I'll show you what I'm talking about when I say midline. So if you go into the settings here, this outer border of the chessboard, you go into styles and you turn the middle line on. This guy right here. I know Malik uses this method a lot too, because he says like, hey, sometimes trading in the middle isn't bad if you get the setup. So you can see if you turn that midline on, you get that tap right into the middle. It lines up with time and price. I don't trade that way, but it's another little nugget that people are using, evolving the chessboard and making it their own. Me personally, if I was trading in NASDAQ, I would have been long right here because I would have got the break and then the retest of my high at 21,278. Stops would have had to be below the previous low right here or this low here. And then we rallied right into my target, which would have been the in wall right at 500. Shorts, I would have been looking for shorts up here inside of 220, right at the in wall, the exact same structural breakdown of everything else, and then rally right into the PM session low. When I tell you this market was so motherfucking smooth today, and it did everything that it was supposed to do, I'm almost afraid to see what the rest of the week is going to look like, because I don't want the rest of the week to be any much like I want the rest of the week to be just like this, right? I want the whole week, if we're going to be volatile or whatever, like as long as it's clean like this, it's going to be a great week for trading. So I hope you guys learned a lot in this market review. That's all I have. My name is T Hobbs, and I'll catch you guys on the next one, man. Peace.
Let's get